questions for.
Sure. Yeah. Thanks for being on here, Max. I appreciate it. And I have been aware of you guys for a couple of years and kind of been watching what you're doing. And so when Paul and I were talking about this when we were together recently, I jumped at the opportunity to be on here for this conversation. And I have a rental property that the tenant moved out. We've just done a renovation on it and it's ready to go either for a sale or to continue to rent it. This is something that I would strongly consider because to sell it is going to create real tax issues for me in terms of cap gains. I've owned it for 15 years. It's in South Florida, the property, and recaptured depreciation. So, the idea of maybe doing this fractional sale, I'm curious what the tax ramifications are for, say, someone like myself who has a rental property.
Right. It's essentially treated the same as if you were to sell the property outright. And so when you sell equity, it's treated as long-term capital gains. You're obviously taxed on the income that you receive as well. It's just proportional to your actual ownership in the property. You are able to use the proceeds from selling equity to 1031 exchange into a like property, either on Lofty or outside of our marketplace. We send you a 1099 at the end of the year, depreciation fully factored in. So we handle all the taxes for you. We don't charge anything extra for that. And so really, we spent a lot of time on this. The tax implications are essentially the same as if you were selling the property outright or dealing with a traditional real estate transaction, because again, that's really what this is. It's just a property owned by an LLC. We just make it easier for owners to essentially go in and out of that investment through our exchange.
And you said proportionally. So if I decided to sell 50% or 80%, then I would have the tax implications on that portion of the sale.
Exactly. Yeah. It's like if you and 4 friends each own 25% of an LLC that owns a property, you would just essentially be taxed on your portion of ownership. So it really works the same.
Got it. Is there any method to utilize your services to effectively refinance the property or not so much?
You could consider our platform as an alternative to refi. A lot of people that list their properties on our marketplace have existing loans with good interest rates. They might say have a 3-4% interest rate. They don't want to refi because they don't want to start paying 7-8%. And so they can list their property on our marketplace, keep the existing loan in place, continue to make those payments, and then just sell a portion of their equity on our marketplace. And because the only fee you pay is just 3% whenever you sell any equity, especially right now, it's a much better deal than you're going to get doing a refi or a HELOC or selling outright, and really not the best market. And so especially right now, our model is extremely beneficial for people looking to get equity out of their properties.
But in the form of a sale versus financing.
Correct. You could essentially use this as a refi if you had an all cash property. If you own a property.
I own this one free and clear.
Oh, totally. Then, yeah, you could list the property. If it was worth $500,000, you would have $500,000 worth of tokens. Click the sell button. You choose how many tokens to sell at what price you want to sell at. And then when anyone buys tokens, you receive the funds immediately and you could just send them to your bank account. And so, yeah, totally could be used as an alternative for a refi for a free and clear property. 100%.
Okay, I got you. But if I were to go and put a loan on the property and pull a couple $100,000 out of borrowed money, of course, I'd have an interest expense, but that isn't a taxable event. Where with Lofty, because it's a sale, as I understand it, any portion that I sell through the platform will be considered a taxable event.
Correct.
Got it.
There are a few sellers, or I would say maybe like 10 to 12 sellers, who actually put in an initial clause that they will automatically buy back their equity at a future date. So this is set in stone. This would be more similar to a HELOC. We always recommend chatting with your CPA, but technically this could potentially be considered a loan, in which case it may not be subject to capital gains. Again, this is something we always recommend you chat with your CPA with, but if you are buying back that equity at a future date, it could be looked at differently. Again, we're not tax advisors, so this is something we always recommend chatting with your own accountant about. But again, that kind of goes into the uniqueness of the different structures. There is this HELOC model. Even if you don't put that initial clause in place, you can always propose to buy back all of your tokens at any time, regain 100% ownership of the property, at which point you can take it off the marketplace, sell it outright, totally up to you. So really, really flexible in that sense.
Good. That's really, really, really interesting. To utilizing a buyback clause, of course, after a conversation with my accountant, possibly then it being treated as a loan. And I guess the interest you'd pay on the loan would be the difference between what I sell it for today and buy it back for tomorrow. Because I assume if I had a clause where I'd buy back my tokens, they would be at that future value. Am I correct?
Correct. So you can say, and you get to choose these numbers. You could say in 5 years, I will buy back these $50 tokens at $55 per token. So
Got
that would be 2% annual appreciation for investors. They get a slight premium, and you could actually buy back the tokens at any point before the 5-year period. It would just be at that initially set price of $55 in this example. We don't charge a fee for this. It goes through automatically. There's actually clawback enabled for properties with this guaranteed buyback clause, just so we can make sure to get the tokens back, give them to the original owner. And then, yeah, at that point, take the property off the marketplace and do whatever you'd like.
That's really, really interesting. Glad we had a chance to talk about that. Paul, may I? I've got a couple more.
Go ahead.
Okay. Thank you. Do you find